Hello, welcome to my project on cluster analysis. My name is Andre Gillerman, and here we go. My investigation in this project. How to describe the metal price of gold from 1971 to 2019 using annual closing prices and annual growth rate of the metal price of gold. This data set starts in 1971 because this is when the United States moved off of the gold standard and the price of gold began to move accordingly because it was no longer set by the US government. For example, in the 1960s, the United States government set the price of gold at $35 and it stayed constant. I created this data set using Bloomberg data, using the price of gold when it closed every year from 1971 to 2019, and the growth rate of metal price of gold per year. Here is the background and statistical analysis that went into my project. There are two types of machine learning, supervised and unsupervised. Supervised learning is done using the input and the predetermined results to understand the relationship between the input and output. This is used in regression and classification. In both regression and classification, the goal is to find specific relationships in the input data that allow us to effectively produce correct output data. This is seen in the chart on the right, where supervised learning has classification and regression, and unsupervised learning is clustering and data reduction. Unsupervised learning is the learning of the structure of data without having the predetermined results, unlike in supervised learning. It allows the user to understand the structure of the data, and this can help to create further tests such as individual hypotheses about the said data. I will be using clustering in this project and explaining more about cluster analysis in the next few slides. What is cluster analysis? Cluster analysis is a generic term for a wide range of numerical methods with the common goal of discovering groups of observations that are homogeneous and separated from other groups. Clustering techniques essentially try to formalize what human observers do so well in the world. There are three types of clustering methods. Hierarchical clustering, which reduces data to a single cluster containing all the individuals. K-means clustering, which is an exploratory tool for data analysis. And model-based clustering, which creates a formal model using finite mixture densities for the population as a whole. Now to explain what I'm using in this project, which is K-means clustering. The K-means clustering technique seeks to partition the n observations in a set of multivariate data into K groups, which are called clusters. K-means clustering is one of the simplest and most popular unsupervised machine learning algorithms. Typically, unsupervised learning examples make inferences from datasets using only input values, such as my dataset, without knowing the outcomes. An example of this in my project is that in my dataset, it does not know the current amount of economic activity that's going on each year, but does know the price of gold that happens that year. How to determine K? I use something called the elbow method. Using a set of code in R that tests for the standard error within a group and plotting the results, using the output on the right, you can see that 2 or 4 is the ultimate value of K, because that is where the graph changes its course. Ultimately, I chose 4 because that is where the graph begins to flatten, and that way there would be 4 unique clusters instead of just 2. My results. After implementing k-means on the dataset, the results came as follow. Cluster 1 will explain when the price is low and the growth rate is high. Cluster 2 will explain when the price is high and the growth rate is low. Cluster 3 will explain when the price is high and there is a high growth rate. Cluster 4 will explain when the price is low and there is a low growth rate. There is an economic explanation for all these clusters, and I will get into them in the next few slides. As you can see on the bottom graphic, Cluster 1 has 8 data points, Cluster 2 has 11 data points, Cluster 3 has 4 data points, and Cluster 4 has 26 data points. On to Cluster 1. This cluster explains the first 8 years after the United States moved off of the gold standard. The price is low because it started at $43 and moved to only $207 in this period. In the next 50 years, this would be the lowest prices period in the price of gold. The growth rate is very high because during this time, in the 1970s, inflation was increasing and the markets were in a recession. And when the market is in a recession, gold is a hot commodity, causing the price of gold to increase significantly. Also, it was the first time that people were able to invest in gold, which made it attractive to investors because there was unseen huge potential for the price level. It is said that gold sometimes moves opposite of the US dollar because it's a hedge against inflation, and we'll see that in cluster 3. But first, cluster 2. Cluster 2 is the past decade that we just experienced, with a high price level and a low growth rate at just 7%. The high price shows the growth of the stock of gold through the past 50 years. This is very high, considering it started at $43 50 years ago. The low growth rate is because during the wild times during the financial crisis, the growth rate was very high, but then it neutralized itself in the following years and ultimately barely changed the price level over the 10-year period. This is because, in a panic, investors took their money from the financial market and shifted it to the gold market, which allowed it to soar. But once the market stabilized in 2012, the gold market tanked, and eventually shows that over this 10-year period with a small level of growth compared to the high level of growth in cluster 1. Cluster 3. This is the most interesting cluster. This cluster contains all the years of high inflation in the United States, and this is why the price is high and the growth rate is so high. When there is inflation in the economy, investors flock to gold because it is a commodity that is relatively unaffected by inflation, because it is a fixed quantity in the vaults of banks that will never go away, so it will not lose its physical value. You can see in the graph that I have included, the high peaks are in the late 1970s, which is why 1980 is in this cluster, and the mid-2000s, which is why 2006, 2007, and 2008 are in this cluster. On to cluster 4. This is the average cluster. This cluster contains all the years of high inflation. This is the average cluster. It contains the most amount of data, which is 26 years. This is a very good thing, because if the price of gold is high, but the growth rate is low, this shows that the US economy is growing steadily and is not very volatile. You can see that the growth rate is only 5%. This is very good compared to the high growth rates that we've seen in the last few clusters. Alright, on to my conclusion and my prediction. The k-means distribution into 4 clusters was almost perfect, as all 4 clusters spoke about the different economic events that have occurred in the US in the past half-century. The 4th cluster proved to be what the US economy should look like, and it is very good that the most data points are included in this, which means that the k-means process was successful. Now on to my prediction about the future. Given the current economic climate in the world, I have some predictions. After doing research about what is going on today, I have learned that many hedge funds are focusing their money into safe assets, one of which is gold. As I have explained throughout my project, as the times get tough, gold price skyrockets and so does the growth rate, and I do not see why this would be any different in the current climate. If this project were to be reanalyzed in the year 2022 or 2023, including the information of the years that we currently live in and 2021, I would assume that in 2020 and 2021, these would fall under cluster 3. The price would be very high, and so would the growth rate. Another reason why I am confident of this prediction is because so many countries have been distributing out money to their citizens, and inflation in the future is very possible. And given the history of the data points in cluster 3, inflation was very high. This would allow 2020 and 2021 to fall into cluster 3, because, given the current climate, inflation has the potential of increasing very much over the next 2 years. Thank you for watching my interpretation of the price of gold over the past 50 years.